Hi traders, this is Brad Gilbert with the FX Market Insight for the 14th of June. Now we've had the FOMC meeting and the Fed have raised the target rate by 0.25%. So what we saw initially, this was expected, but it didn't stop a massive knee jerk on all of the major currency pairs. As you can see, the dollar rallying very quickly and then slow, not really exactly slowly. I should just correct that, Dollar Yen. When it was a bit of a up-down situation for Dollar Yen, and also just in line with that dollar strength with dollar CAD and sterling spike lower. It's been all over the shop. So basically, the market expected the rate hike, right? But what we saw out of the statement was the Fed has taken out the rates will remain low for a long period of time. They've taken that bit out, but they extended in there that they will tolerate inflation above their target rate through to 2020, which generally means that there's still two rate hikes scheduled for 2018, but that may slow things down from there. They may let inflation kick along a bit further before they do raise rates beyond their current plan. Now, so with your technicals, right? So I've already adjusted the most of these major currency pairs. You've got to include this spike in your moves. Now, dollar CAD hit right on the level. Dollar Yen was pretty muted across the whole meeting. It was compared to some of the other currency pairs. It didn't really sort of seem to get a real big run on. But so the Aussie's still within ranges. Kiwi back to where it was. Okay, now we've got the ECB meeting in the European session coming up. It's just sitting here on the highs. Now the market must be long dollars at this stage, so we may see a bit of a short squeeze at the top side in euro ahead of the ECB. Now I don't think the ECB are going to come out with anything extremely positive, so I can't see it going too far. But what we are seeing is that continuation of a sort of a choppy, volatile, range-bound market, and that should continue. Sterling, well, Brexit, economic numbers all over the place. And the CPI number was just off the mark on the year-on-year. PPI numbers a bit stronger. So sterling is not an easy trade at all at this point in time. So just consider that into your when you're assessing which currency pairs to trade. Now, oil is starting to move back up, $66. That should put downward pressure on dollar CAD, but there's so many different things pulling and tugging at dollar CAD. It's very hard to sort of work out exactly what's going on. Overall, it has been moving higher over the sort of medium to longer term. So you've got to be thinking at some stage it's going to break higher, especially if that NAFTA agreement does turn out to go pear-shaped for Canada. So they're your major currency pairs. Now, I just want to come back and give you a look at the US dollar itself. The pair, the dollar index, and this is where you should really come back to, and you can really see exactly what's happening with the dollar on any given sort of time. I know the basket is 58% is euro, but it is a good overall analysis of what the dollar is doing, I should say. Now, just having a look here, obviously with the rate hike, we did see it spike higher. Funnily enough, it hit right on the resistance level there, just above 94. At the moment, it's almost like if you read the various news outlets, and let me just come across to those just briefly, you get all this, they try and give you answers for what's going on. So if you look into, dollar mostly firmer as the Fed sees more US rate hikes, that's all well and good. One of the key things about this is, they will start saying that traders are banking profits. I think I read there before. The greenback booking profits in advance of the ECB meeting. Now, you're not going to really take profit a full day out from that. I think that's a bit of rubbish. One of the key things is, if you look at the central bank down here, this is the key part for me, is it also ended its pledge to keep rates low enough to bolster the economy for some time and signaled it would tolerate above target inflation. Now, that part of the statement is it's not dovish, but it's mellow, right? They're going from an aggressive stance, trying to take the market into a perception that rates probably won't be raised aggressively as much as they are in 2018. They'll wait and see how inflation goes, and they'll give it more room for the next couple of years. So that opens up potential for them just to stay on hold. Now, I think that's the main reason why the US dollar has, if anything, they're banking profits on the dollar, right? This spike higher, they didn't. Well, that was the initial impact. Now they've thought about it and think, well, okay, so we're on a steady path. Yep, we're just going to bank some cash here and take some money off the table. Now, it is massively oversold, the dollar index. Fundamentally, it's still very strong, the US economy. The numbers are strong. The Fed's strong. They're raising rates. So I think this is a short-term little blip. And I would expect, there's potential here for a short-term spike down and then for it to rally. I think that may be the case, like a false break trade. If you have a look on the daily charts here, the dollar index, it is just trading sideways. It's not like it's breaking down massively. And in actual fact, what we can be doing now, since it has hit a new high and bounced off the lows, you'd almost be inclined to sort of move that across. So you can sort of see, it's a pretty fickle support line, but you can see where it is actually gravitating towards trading sideways. If it breaks down below 93, well then, yeah, sure, all bets are off, and we may see the dollar slide a bit because the market is very long US dollars at the moment. If we had the opportunity to see the CFTC data, the commitment of traders data right now, I think you'd find the market was long dollars, and this is why we're getting a bit of a squeeze to the downside. Just a short squeeze, or a long squeeze, I should say, in that regard. So so what are we looking at today? I see today's trading as a really great opportunity. What we've got is we've got very good trading conditions now. One of the key things that we have updated on the site is the trading conditions outlook. Now, I wrote an article last week about it's the same as everything else. When you go about your day, first thing you probably do before you get dressed is actually have a look at the weather. And that will determine what activities you do, what you wear, and everything about the day. It's the same for trading, right? You need to be very conscious of what's going on. Now, we've got very clear trading conditions ahead of the ECB. We have some key data coming out. The markets have settled down. All the rumours and thinking about the Fed, what they were going to do, is out in the play as well. So Aussie is going to be very much in play today. We've got some Chinese industrial output numbers, employment numbers in Australia. And then coming back down below that, we've got the UK retail sales. And then obviously the big part of the day will be the ECB interest rate decision as well. Now, with that European interest rate decision, it's going to be a little bit tricky, primarily because, or two factors. One is, the conditions in Europe haven't exactly gone amazing. I can't see the ECB doing anything, especially with now Trump's new tariffs on Europe. That's an uncertainty the ECB has to sort of think about. Also, I know Italy has settled down somewhat politically. Spain, there was also some rumblings there. So Europe's a long way from doing anything. And I don't think, and don't forget, Euro rallied last week on the back of, if I just change screens there just for a second. It rallied last week basically on the back of sorry, let me just move this trend line across and lose my train of thought. On the back of the fact that the market was sort of suggesting that the ECB were going to give them a clear date with regards the starting to withdraw their QE. Now, I don't think that's going to happen. And part of this whole move was on the back of that. So I think we could see a significant move to the downside, back down here, back down towards 115.50 over the coming week. Fed strong, ECB weak, it's got to go down. I mean, that's, and this is why you don't have to get too caught up as well in the short-term price action. I mean, let's let it go for the moment because I don't think Euro goes too high, but if it's just above the resistance trend line, sure, it could shoot up. It could just start churning away there and you could get caught up in a fickle, non-directional move. All right, so that's something to be aware of. Now, the other thing, so that's one thing why I think the ECB aren't going to do much. Now, if I just come back to the main screen again, what I want to focus on is just have a look at the technical outlook. I've just done the daily analysis snapshot, right? And this is where you can see a number of different variables. Now, the Euro data yesterday was quite weak. Let me just make that a bit thicker. Okay. Now we had some mildly stronger US numbers. The Fed raised rates. They are talking about 2 more rate hikes, or has been factored in for 2018. It's almost a little bit, I was about to go sort of sideways because they have rolled out that 20, the inflation target being above that. But just at the moment, you would expect the fundamental outlook to be still upwards for the dollar. Long term, it's been going up, but on the dailies and short terms, it's not really doing too much at all. So it's fundamentally my bias is to buy, and that gives me a bit of a buy signal for the dollar. Now, the rest of these currency pairs, this is where it gets, we need the extra other countries to come in with some data here. I mean, dollar CAD has been going higher. Now, I know it's been trading sideways, but technically, you should probably be thinking about buying. That's what I'm thinking of. And I actually, looking at it, I was like, well, I'm not sure. But being neutral on your technicals here will guide you into some trades. Dollar yen, it has been pretty steady, long-term going up, but short-term is a bit of a cloud. So that's why we were in a bit of a wait situation there. Dollar Swiss, very mixed signals, as is the Kiwi and Aussie. Sterling long-term down, but short-term sideways. And Euro's got very mixed technicals there as well. So what we're looking for at the moment, and this is where the key opportunities come into play, you're looking to get those sort of technicals and get the direction from these numbers. Okay, we've got a number of things coming out. I know we're coming into Thursday's trading, but this is probably the best part of the week. Okay, the big cloud will be the ECB, but I think that could potentially be a good trading opportunity. I'm thinking downside already. I'll be reassessing that sort of stance as it gets closer to the event. All right. So anyway, there's a fair bit to digest, and actually one key thing that has come back into play for me, if I just come across, have a look at the yen crosses here. They are looking particularly gorgeous. Now, once again, what we're looking for is a bit of a build-up of price action. Now, we've got the cloud activity here. I mean, Aussie's sort of sitting on the bottom of the cloud. We're coming into the Asian session. This is where the cloud's really going to come into play. Obviously, all the Japanese traders are looking at this very closely, but it does line up with a lot of key trend lines here as well. So just have a look across the board here on your yen crosses. This is where you can actually poke out a fair amount of cash just by being consistent with your analysis and just making sure you check the where these currencies are. You can see like sterling yen, euro yen, Aussie yen, Kiwi yen in particular, all set up really nicely. If we start to see the dollar slide, then down through the bottom of the cloud here, dollar yen, right? Well, then we're going to see some decent, maybe they're only short-term moves, but some decent moves here across the board. Now, my massive highlight today and what you should really be focusing on coming to the Asian session is Aussie yen. Okay, we've got the Aussie employment data. We've got some Chinese numbers. We've got a bit of a downward bias here, short term, on dollar yen. So my thinking is weak numbers here on the Aussie, right? Aussie against the dollar's a sell, but Aussie against the yen is in particular a massive sell. If we get the Chinese numbers and the Aussie numbers all coming in bearish, well then I can tell you what, sure as hell, this thing's going to start to fly, and that's where I think the real good sort of cash is going to come from. So just keep an eye on this as you go through the day. The focus today, outside of the ECB, is definitely on the Asian session. As I said, we've got the Aussie employment numbers, and we've also got the Chinese numbers here as well. So keep an eye on that. Very big for the Aussie, also important for the Kiwi, right? So that's your major focus. Obviously, coming down to the European session, retail sales out of the UK, and then followed up by the you're looking at the ECB refinancing rate. Okay, so plenty to go on. Have a good day. We'll see you in the trade zone if you are trading or have any questions. All right, guys, have a good one. This is a really good opportunity to make some cash today. Cheerio.